Good morning, stock investors, stock traders. It is Monday, December 22nd, and we are approaching the Christmas holiday, the New Year's holiday. This week will be a shortened week of stock trading. We will have a full day of stock trading today. Tomorrow will be the same. And then Wednesday, we're going to call it a day, kind of like after 4 or 5 hours of trading. Then we'll take Thursday off and come back in full force on Friday. Although I don't think a lot of trading is going to happen on Friday. Probably a lot of investors will be spending time with their families, chilling in their homes, kicking back, spending time with family. So today we are headed toward a green market with the NASDAQ futures going higher, the S&P futures going higher, and the Dow inking out a small pre-market gain. Crude oil is advancing. It's up almost 3%. Wow, interesting. So what we're going to do on this stream is we're going to talk about stocks. We're going to talk about the market. We're going to have multiple approaches. My colleague Daryl is with me, and he handles the technical analysis on stocks. How you doing this morning, Daryl?
Wonderful, Victor. Thank you. It's good to be here. Hello, everyone.
It is great to be here. It's great to kind of close in on another successful year of stock investing, of growing my portfolio, growing my knowledge. I'm excited about 2026. I'm like, man, I got better in 2025. How could I do even perform at bigger numbers in 2026? And I think it's going to be there. 2026 could be just in a continuation of a market that has been increasing in value. And it's all about finding the right stocks that are ready to go up the escalator, that are ready to go up in price. It's not necessarily investing by just looking in the rearview mirror and going, well, this stock did great for 3 years. It's probably going to do well for another 3 years. Well, maybe, but looking the rearview mirror is good from a research perspective. We got to look through that windshield. We got to look ahead. We got to look at forecast of stocks. We got to expect, how's their position in the market? Are they going to grow revenues? We don't have to do it alone. We've got some excellent tools out there. We've got stock analysis that aggregates all this analyst information and puts in one page what analysts are thinking about a forecast for a business. Are they going to grow their revenues? Are they going to grow their profits? We can take that and then forecast cash flows. So we then construct what we think is going to happen with a business. Let's say Amazon. What's going to happen with Amazon in 2026, 2027? And if it's a pretty positive near future, the stock's probably going to do well. How does it value today? Is it discounted or priced at a premium? And then last, Daryl comes in with his analysis of the charts. How has, in the example I'm running with, Amazon been trading? Is it setting up to trade really well? Or is it really setting up to drop? Just looking at the charts and interpreting what those charts, the data, the information is telling them. So I think it's a good way to approach the market. My goal in 2026 is to be a 750 hitter, using a baseball analogy. I'd like to strive to pick 3 out of 4 winners. Now that's really hard. And that means that if I decide to buy stocks, 3 out of 4 are going to be positive gainers. And once, I'm never going to get it right. Sometimes I'm going to go on a little bit of a losing streak, but 1 out of 4 will be a loser. And I got to figure out which one that is and get that stock off my portfolio so I could use that capital for good in my portfolio. So that's what we're about. We're about investing or trading. And depending on the type of investor you are, whether you're a older investor looking at retiring, or you're retired, or you're just, more, a little more conservative. You're like, I worked hard for my money. I don't want to take big swings at the market. I'd like to be conservative. Well, we've got really good stocks to talk about in that area. Got good investing ideas, got ideas on how to generate revenue or income from your portfolio. And maybe you're a younger investor, which there's lots of on this channel. Most of the people that follow my channel tend to be younger, which is great. If you're young and you're learning to invest, you are really doing yourself a giant favor. The more you learn when you're young, the better you're going to be over time for a couple of reasons. One, you're probably going to start saving at a younger age. You're going to develop some skills and some knowledge that will enable you to start compounding your wealth at a younger age, and you have more years to grow that wealth. So if you're a younger investor and you're willing to take on more risk, awesome. This is the right market for you. There's some exciting companies out there. We're in the era of cryptocurrencies. We're now in the era of prediction markets where people are buying contracts that resemble options. And that's really growing. And you don't just need to buy contracts on stocks. You could buy contracts on just about anything that's happening like sports and events around the world. So that's what our stream is going to be about. We are going to get into some stocks that I thought would be interesting. We're going to lead off with Microsoft. Then we're going to take a kind of a tour around solar. And if we have time, get into some neo cloud stocks. But we'd like to know what you want to talk about. If there's some stocks you want to cover, please put them in the chat. We can cover stocks that you guys have in mind, that you've been researching, you're interested in, or maybe you saw a headline that looks interesting. Pop it in the chat. If you're a member, it comes with your membership. If you're not a member, buy a $5 super chat and we can review that stock. All right, so just a quick tour of the market. As mentioned earlier, the Nasdaq's going to open to the high side. That looks good. Gold is higher too. And crude is trading more expensively. So that's going to help the energy stocks like Exxon. So that looks interesting. And what's looking at the year end here, what are your spidey senses telling you, Daryl, about, are we going to have that Santa Claus rally, or what do you think is going to happen over the remaining trading days of 2025?
I think we'll end the year a little bit higher. It's not going to be a blowout, I don't think, but we'll probably end higher. The chance of having 2 down Decembers in a row, because we had one last year, the chance of having 2 in a row are much smaller than you would guess. So I think we'll end up a little bit higher.
Yeah, I agree with you. Although my spidey senses are, we could have a couple really good days. I think that and the reason I say that is we've already banked some down days in the month of November.
Yep.
We banked some down days here in December. And it's made some stock prices for some very well-known stocks, just brought those stock prices down at a more attractive level. And investors, I mean, it's no secret, for 3 years, stock investing has been very lucrative, has built wealth, has created, has made some people a little wealthier. Now, that story, I don't think is going to change for 2026 in general. We'll always have some corrections and sell-offs and all that good stuff. It's a stock market. But I actually think that the retail investor in 2025 really solidified that, hey, individual investors like you and I, and just about everybody who's joining this stream, we're outperforming the institutional investor, the market, the S&P. And it's because we have really good knowledge, we're developing skills and so forth. And I think more and more people want to be a part of that investor community, that investor population. Okay. And now that people maybe have the last 2 weeks of December, and I know we're down to less than 2 weeks, down to like call it a week and a half. I think they're going to get behind their computers and they're going to say, yeah, now that I have time, I'm not working today. I'm going to put some buy orders into some stocks that I think are good companies and they invest. I remember a story that, I had a barber for quite a while. He retired. He retired on me. And I used to like getting haircuts from him because I would sit down and we would talk stocks. The whole time he'd be cutting my hair. He'd be talking about this stock and that stock. And that's awesome. And I thought just that was so cool that my barber, and he was a barber for like 40 years. Good guy. He was a veteran, good man. And he retired now that somebody bought the business from him. And I still go there, but I miss talking to him about stocks while he cut my hair. But that's an example of how the retail investors really, getting more knowledgeable. It's fun. It's something that just about anybody can do. You just got to put in the time to learn and learn where or figure out where your sphere of knowledge, what stocks you could invest in, which ones make sense to you, you can completely understand and make good decisions around. All right, so stock market's doing its thing. Any big stories out there that you've heard, Daryl, that's going to affect the market?
It's been pretty quiet news wise, I think. I haven't really seen anything that would sway the market really one way or the other. Even the Federal Reserve chair selection seems to be pretty quiet, just interviews going on and what have you. So we'll see what happens with that. But it's been pretty quiet from my perspective.
Yeah, I agree. I agree. I was listening to a couple of initial retail reports of how the consumer shopping out there. It seems to be going well for retailers and Amazon. The consumer is out there buying stuff for the holidays. So don't think we're in a recession. I think we're doing okay economically. Inflation, based on the report we received last week, seems to be tame. It's not a big giant problem, and that sets up a lower interest rate environment next year. And unemployment, even I don't think unemployment's a big problem. Do I have that? Do you have the same observation as I do that you saw that kind of happen? Or I'd be curious to hear what you think about unemployment. Is it elevated or is it just about right?
Well, the numbers higher. It's 4.6 on the last read. I think that's the highest reading we had since 2001. But the market seemed to take it in stride and didn't seem too terribly worried about it. So something we'll continue watching. I know the jobs report, there were a few more jobs than they were expecting, but I think there's some revision that could possibly come in that's going to reverse that. So we'll see what the market thinks about that when it gets reported. Let me
Hmm.
see what economic reports we have this week. I think it's actually a pretty light week. I know we have initial claims on Wednesday. They'll be reported a day earlier. Come on, internet. Yeah, they'll be reported one day earlier than normal. We get durable goods, so that's stuff like refrigerators and washers and dryers, etc. We get the GDP growth rate, the second estimate. for Q3. Wednesday, we get mortgage applications. I like watching that one. It's not normally
I
a
expect
market.
that number to see a big pickup.
Yep, it was down last time. And the initial jobless claims and continuing job claims. So they're still holding in pretty good as well.
Right.
So not a ton of reports this particular week, so that's going to be quiet. And I doubt, I presume there's probably even fewer next week.
Mm-hmm.
Pending home sales is one that I watch. We do get the FOMC minutes on the 30th. They're going to sneak that in right before New Year's. And then, yeah, jobless claims again. So that's it. Friday, global manufacturing PMI will be, I hear that quoted a lot on the media. Pretty light calendar over the next 2 weeks.
Looks that way.
Yep.
All right. So let's try to make sense of the market. And let's start with a big stock review of Microsoft. I don't think Microsoft needs any introduction. And the company is, I think, the third or fourth most valuable company traded on the stock market, $3.6861 trillion market cap. Its forward P is 29.23. And we're going to get into the forecast of their growth and so forth to see is that a low or a high PE? The analysts believe it's discounted. Now, the reason I wanted to look at Microsoft is I've owned Microsoft on and off for a long time, like 20 years. And I owned Microsoft for a long time. And I sold it 2016 ish. And since then, I haven't owned it long term. But I'm looking at the stock and I see that there's kind of a plateau that it reached June 2025. Now, I'm not going to get into technical analysis. I'm going to let Daryl handle that. He does an awesome job in that area. I'll leave that up to him. I'm going to get into some fundamentals. So, what are the things that I like about Microsoft? So, the revenue growth, they are a giant company, $281 billion of revenue. That's a lot of money that they sell their products, mainly software and services around software, like cloud infrastructure services. They have a bunch of businesses. They're into gaming. They're into all kinds of stuff. They're growing that number by 15%, which is quite impressive. You have such a big number growing at 15%. And when we look at the trailing 12 months, this takes the last 4 quarters of this business. They're growing at 15.59%. Again, I'm impressed. That's a very good growth rate. Let's look at their gross profit to see if these guys are really a profitable entity. Now they're big, 68.76% gross margins. That's a very good gross margin number because it just leaves a high ceiling for such a big business to make a lot of money. And they are making lots of money, 35.7% profit margin. Free cash flow, 26.55. These numbers are excellent. Excellent numbers. Okay, so we know if we look in the rearview mirror, these guys have been doing really well. They have a very attractive business to me. It's a very desirable business. They are growing. They're very profitable. They generate a lot of cash flow. Now let's take a look at their forecast. What are analysts? And we got lots of analysts covering Microsoft. This is a very famous, highly owned stock. 33 analysts are covering it. They're saying it's discounted. Okay. So let's take a look at the forecast. This is one of the most useful pages within stock analysis. There's a lot of good stuff on stock analysis, but I really like this because it brings together a lot of analyst data, research, information, predictions. 63 analysts are contributing to what the forecast is for the current year that we're in. That's going to end June 30th, 2026. And then the following year and the following year, we have a lot of good research. And I'm seeing that analysts believe that in 2026, they're actually going to accelerate their business. Well, that's positive. And then they're going to get back to that high 14% range, 16, 13. These are terrific numbers. In 4 years or so, they're going to be well over $500 billion in revenue. Phenomenal. So when we look at this type of growth for such a big business, I'm impressed. That looks good. And their profit is going to increase pretty much similar to their top line revenue, but actually in the outer years, it's growing faster. So their profitability is growing a little faster. P ratio right now is 29, and it's going to fall if the stock remains the same. My logic would tell me that their stock price is not going to stay the same. It's going to go up because Microsoft's a really high quality company. Its numbers look fantastic. So I would expect that this stock's going to rise over the next year, 2 years. So that's what I'm seeing from a fundamental perspective. I'm going to kick it over to Daryl. I'm going to update my valuation on Microsoft. We'll come back to my valuation after Daryl is done.
Yeah, because I actually think Microsoft is still a little bit overpriced based on my calculations, and FastGraphs is also showing them trading above their normal market multiple and their fair value, but they have been since 2017. They came down pretty close to their normal market multiple in 22, but they're pretty extended at the moment, and they're even above what I calculate as a fair value. So I'm going to be really interested to see your calculations. So they had a big jump up in price after their earnings in May. The last 2 times they've reported, they had a pretty nice jump in the price, but on both times, here and here, they generated black candles. A black candle means it opened higher and closed. It opened higher than the previous day, but it closed lower than it opened. So that's what a black candle means. And that, just based on this chart, you could almost say that when that happens, expect a downturn afterwards. And yes, we got one in both of these cases. We did not on this one. This was a black candle, much smaller than this one, about a third the size, about the same size as this one, but we don't have a wick on the top and bottom on this one, where this one at least had a wick on the top. That means people wanted to take the price higher. It came down, and after thinking about it, buyers came in and actually drove the price higher. So that's the way I interpret the candles that I'm seeing. Amazon is also another very interesting chart to look at in that particular regard. So I have a couple of resistance points that I'm keeping an eye on. One is the high we saw on the 31st of July. Another one would be the high that we saw on the 6th of October. That came up and was tested once more and rejected and has been declining since. So like most other AI related stocks, we did have the sell-off in November. Microsoft has actually been consolidating basically since probably the end of November. They've just been trading sideways. They had a declining 50-day. It may be leveling out today. Let me see what Microsoft's doing in the pre-market. They're up about $1, a quarter of a percent or so. That could it's not really going to get above the 50-day, so it may continue a slow downward slide until the prices can get above the 50-day moving average and start pulling that higher. They did trade twice, at least intraday, and it looks like at one close here, touch the 200-day moving average. I'm encouraged by the fact that it held there and didn't break down. We haven't really tested that first test since the 200-day kept climbing, and the next pullback it just touched the 200-day. It didn't come down and touch the previous low. So this seems to be at the moment a pretty good support line. We'll keep an eye on that. Just keep in mind that it's very short. It's a very short support line. If we go back over here, this was a period of steady price increases. So the next support area would probably be at that gap close, so about 419, but I'm not expecting that it get there, even though that's about where I have them fundamentally valued. So I'm eager to see what Victor has there. The 21-day has been declining. It looks like it's going to level out today. I can see it over here that looks like the last 2 days we had a somewhat flat 21-day moving average. 200-day is still increasing and the 5-day is turning higher. We had huge volume on Friday. That was not unexpected, it wasn't unexpected because of options expiration. And on top of that, it was a quadruple. Four types of options were expiring on Friday. So big volume, but it was a positive price day. So that's good. Their RSI is somewhat neutral. It's just sitting right around that 50 line. It's been trading that way below the 50 line since the 30th of October when it went from overbought condition on the earnings and crossed down below the 50. That's where it's been trading. That caused a bearish crossover of the PPO that was in bullish territory, but it has declined and just trading somewhat sideways. We had some decumulation back in August. That has steadily picked back up. We had a week or so where it pulled back and seems to be making steady progress back to what we would call highs that were in July. So we'll keep an eye on that. Money flow is currently positive and in bullish territory. They're underperforming the SPY over the last year by minus 3.85%. They're underperforming the technology sector overall by 10%. They are outperforming the software group by 3.83%, while that particular industry group is underperforming the SPY by 7.39%. So we're waiting for a catalyst basically to break out of this consolidation. We'll see what that catalyst might be. I don't have any in mind right off the top of my head.
All right, so let's get into Microsoft. And right before I do that, Mike, good to see you. Looks like I'm going to take a look at EVLV. Got that on the list. I'll scratch TER and WNB. Let's get into Microsoft. What's going on over? I think they are headquartered in Redmond, Washington. So the stock has not performed like the other big cap stocks. For a while, it really picked itself up coming from April, but it has been kind of, as Daryl mentioned, is kind of just consolidating, looking for a catalyst. And as I value Microsoft, a couple of things to keep in mind. Microsoft's credit rating is one of the highest. Like you look at Apple, Johnson and Johnson, it used to be there. I don't think they're there anymore. But Microsoft's like the highest credit rating you can get. Super good credit rating. So they're going to have a low discount rate for me, lower than typical. Good quality company would get a 7.5 discount rate. Microsoft deserves a little better because they're just such a secured company. And I'm using their trailing 12 months free cash flow to build a forecast. In that forecast, I'm going to grow it by 16%. They're supposed to grow 18% here in 2026 and then get into a pattern of 15, 16, 17, 18. So I think 16 is pretty good number to go with. And that's going to grow our cash flows for the first 4 years. And then after that, I'm going to grow them terminal value 4%. That brings a net present value of those cash flows to $3.8 trillion. I'll add cash, take away debt, and I'm left with a $3.9 trillion valuation of the future cash flows plus cash minus debt. So that offers an 8% discount on the value of cash flows versus the current stock price. And this is updating near real time. It's a Google lookup, so it's updating like every couple minutes. Earnings per share has gotten better since the last time I looked at it. Now, PE ratio. Now, where did I kind of think about that number? Well, I'd like to use a number that is reasonable when I compare it to its peers, and its peers being the Mag 7 stocks. And you got Google Alphabet at 27.5, Amazon at 30, Apple at 33. Meta is looking pretty good at 22. You got NVIDIA at 25. And then Tesla is kind of throwing the average off here, 212. And Microsoft is, I'm going to say a little bit high because you could buy, like Alphabet's growing, I think growing a little better than Microsoft. Amazon's growing a little less, little lower percentage wise, but they're bigger. They're almost double the revenue, believe it or not. No, they are more than double the revenue. And then Meta obviously looks good. So I'm actually getting influence to bring down my PE ratio. I'm going to bring that down to 30 so that it is comparable to its peers. And it's above 25, which would be kind of like the average for the S&P. Let's ask Gemini. What is the average PE ratio just to kind of make sure that so trailing PE is 30, forward PE is 23. So this number looks pretty low. All right, so we're going to bring that down to 28. And the reason it's higher than what the S&P is going to do is this is Microsoft. I mean, this is a company that I have far more confidence in than the average company. So it's going to have a higher PE, but those numbers look pretty darn good for the forward PE. It actually makes me, while I'm at it, makes me more optimistic about 2026 if the forward PE on the S&P is 23, because it was lingering around 26 for a while. So it looks like earnings have improved and maybe stock prices have pulled back a little bit in November. growth rate of 18%, and that's using the stock analysis forecasting of where profits are going to grow. So all that in, 9% discount on Microsoft. So Microsoft is a buy in my book, but it's a buy with this description on it, which is Microsoft is not going to be the next Palantir. It's not going to be the next Rocket Labs. It goes up, 100, 200, 300% in a year. That's not what we're dealing with. But let's just imagine a market where things sell off. The value, the bones, the structure, the fundamentals of Microsoft, I would be really surprised if this stock dipped below 20% under any conditions. But I would not be surprised. I'm going to pick on one of my own stocks, Robinhood. That's one of my big holdings. Robinhood could sell off by 40% in 2026. That's within my range of expectations because it's gone up very quickly. Its fundamentals are good, but it's not Microsoft. So as I look at Microsoft, I put it in a category of this is a lower risk stock. It's not going to have a lot of negative volatility or positive volatility. So this is going to be a good performing stock. It's going to be kind of like a stock that I could put in the corner, kind of expect what it's going to do. I think it's going to perform well in 2026. I think it could probably return a 15, 20% appreciation rate and then set up well for 2026. So that's how I view Microsoft. And Microsoft most of the time is well priced, or I should say accurately priced to its value, because it's a really well operated business and it's been front and center. Like if you study, like what were the 10 most valuable stocks 40 years ago? Nah, maybe that's too long ago. 30 years ago, Microsoft was there. 20 years ago, Microsoft was there. 10 years ago, Microsoft was there. Today, Microsoft is there. It's been there. That's one of the few ones that, like General Electric used to be like really near the top. Now it's dropped, and it dropped before it split. Exxon used to be the most valuable company like 20 years ago. It's nowhere near the top anymore. Walmart, Walmart's kind of near the top again, but for some time it was way down on the list. So that's where I'm at with Microsoft. It's not super compelling, but interesting. Am I compelled to buy shares? No, not yet. Maybe if we have a pullback and the market offers me a better price, maybe at that point. Right now, as we trade, Microsoft is down a little bit. Look at that. It's down a little bit. Okay. And my valuation's like at 5 and some change here, 535. So yeah, if I can get the stock at maybe a 15%, 20% discount, maybe then I would pull the trigger on it. So that is Microsoft, high quality stock, just a really solid stock. So I'm an older investor. For me, I like stocks that are interesting and valuable and all that good stuff. But I also appreciate stocks that behave the way that I think they're going to behave. And I think Microsoft is going to be very reliable. All right. So that's the analysis on Microsoft. Let's take a look at that stock market, see what's going on, see if it's going up or down. Overall, we are higher. NASDAQ's higher. Russell, well, this one takes a little time to update. What is going up and what is going down? NVIDIA. And NVIDIA for like 30 days was selling off. So now investors are buying that stock saying, hey, I want to be an NVIDIA stockholder. Palantir is higher. Uber is, look at that. Uber had been getting beat up for like 2 weeks. It had been selling off. So maybe it's investors have realized, wait a second, we want to buy Uber. Meta is higher. Looks good. I showed you on this screen here that Meta had the lowest PE ratio out of the Mag 7, 22 PE ratio. It's a pretty attractive business. And they pretty much print money when it comes to their applications. Financials, look at all that green. Whew. A lot of green here. That's looking pretty good. Very good. Tesla is going higher. Energy, that oil price is causing a nice little rally in energy. Healthcare, it's got some winners and it's got a couple small losers. Utilities getting hit. Walmart getting hit a little bit. Okay. So consumer staples are not working today. Real estate's not working. Industrials, I see some green. A couple red spots, but mostly green. And it looks like Netflix is under pressure. I heard a few of the headlines that it seems that the bidding for Warner Brothers, that Paramount may have a pretty good chance of winning that bid for that studio. And that would leave Netflix out of the equation. And we'll see how that plays out. But that's the news I was hearing. Maybe that's what's causing the sell-off. All right. So that is the heat map. So before we get into the thread around solar stocks, let's take a look at this stock that Mike was curious about, which is EVLV, Evolve Technology Holdings. Evolve Technology Holdings provides artificial intelligence, AI-based weapons detection for security screening in the United States and internationally. Its flagship product is the Evolve Express, an AI-based concealed weapons detection system designed to detect firearms, improvised explosive devices, and tactical knives. Okay. So where do they use this? In airports and federal buildings and so forth? Yeah, it looks that way. Here's an airport situation. And I must say that airports have gotten real good. You know, I'm like pre-check. So you go in and get on your aircraft really fast. And it looks like they're using it in ballparks. Very good. That's a good idea. Yeah, stadiums. That looks good. Very good. Very cool. It's good to see this company operating. Concerts. I mean, you name it. This technology could be used all over the place. Okay, so I understand what they do as a business. The stock is flourishing, 100% gainer. But the 5-year, look at that. We had a sell-off. But the 1 year is telling us investors really liked it. And it's a small cap, 1.25 billion revenue, 136 million. So you're paying less than 10 times revenue. We'll see if they're growing. They're not making money right now. Analysts think there is a discount available. So they are growing. The growth rate last full year was 30%. Looks like growth is accelerating, 56% growth in the most recent quarter that was closed. That looks pretty good. And let's take a look at how profitable they are. So their solution involves some hardware, so I can understand why they don't have those super gross margins of like 80, 90%, because they're making physically those hardware devices that end up being installed at the stadiums or the airports and so forth. So for now, they're small and they don't have the volumes to create a profit just yet. Okay. Um, so when we look at the annual, so they were kind of just getting going. It's another $136 million revenue company. All right, so let's take a look at their balance sheet. That's going to be really important. And they have a little bit of debt and they have some cash. They are burning cash. Okay. So it looks like they may run out of cash. They may have to issue out some debt or start generating some free cash flow soon in order to avoid having to go into the debt markets or issuing out more shares of their stock, which would also be a negative. So this year, 41% growth. But next year, it's the percentage growth is dropping to 15 and then 18. So this is a little bit of concern, or I would say just be realistic. That is the market going to be super excited about this type of growth rate? No, because it's still a really, really small company. I'm seeing way more risk than upside on this one. I get the solution, I get the product, I get what it does. I think it's got a very good place of being used. It looks like, Mike, you think they're going to increase their cash flows. That'd be important. I think it's a necessity kind of solution. I most definitely like if I'm going to go to ball games and I see their equipment being used, I'm going to feel better about going to that ball game. I live in the Los Angeles area, especially Dodger game. I don't go to a lot of Dodger games. I'm an Angel fan, just to put that out there. But from time to time, I might go see the Dodgers, and Dodger Stadium could be a little dangerous. There's been stories of fans getting a little out of control and hurting other fans, and don't like that. I go to SoFi Stadium. That's pretty safe. They have this equipment there, and I go to basketball games and concerts. I enjoy that. So if I see their equipment, I'm like, cool. I'm going to keep coming back to this venue because it's a nice, safe venue. So it's a good solution. I would watch this stock and maybe at some point be interested in it. Their margins are not super fantastic, right? And their growth rate, you think about like Meta's growing at 25% and they're gigantic. So I'd rather buy Meta. That's a little more of a sure thing, sure bet, big winner. So I would watch this stock, but I see some risk out there. They're running out of that cash on the balance sheet. They got to start generating some free cash flow. And maybe they can get creative and see if they can innovate some new products. It's good to see that their stocks really received a lot of attention recently and had a strong rally. But I think it's got too much risk for me. But let me kick it over to Daryl to see what he's seeing.
Yeah, I see it doesn't have much upside. I put this auto resistance line here that shows it's been tested 3 times. It traded right around that line all through August to October. We had a little dip here, but I don't see much upside unless they can, break out above that and sustain a run. So that's probably about all I have to say on it. It does pull down quite frequently to $2 a share. I see a couple dollars per share, even paying as high as $4 per share is probably not a bad place if you believe in the long-term prospects to collect shares. I wouldn't be buying them here. You're just too close to topping out here unless you get a real breakthrough. But I think there's a little too much risk at these prices.
Yeah, and I look at that revenue growth forecast, and it's just not super exciting. 14% for a small business is not like setting any records. So that's if they were growing at like 60%, it's like, whoa, that's going to be an exciting company, but they're not. All right. Thanks, Daryl.
You're welcome.
So, Bo, good to see you. Hope you're doing well. Let me know, Bo, if you want me to look at a stock. All right. So, Benton, good to see you, man. Let's look at ELA. So, ELA is Envela Corporation. Envela Corporation, together with its subsidiaries, provides recycling and re-commerce services in the United States. The company operates in two segments, consumer and commercial. It is involved in the online and brick-and-mortar sale of authenticated high-end luxury goods, including pre-owned and repurposed fine jewelry, diamonds, gemstones, luxury watches, secondary market bullion. The company also offers precious metal products. In addition, it provides end-of-life management of IT assets comprising of data destruction, asset refurbishment. Okay. So these guys are out of Irving, Texas. All right. Wow, look at that. So when you can take your electronics there and they can kind of wipe them out, get rid of them. You can take your jewelry. Okay. Okay. This looks interesting. Okay. So they're commercing jewelry, fine goods, computers, electronics, and that kind of thing. They're under some pressure today, but they've just been flourishing for the 1 year and the 5 year. Look at that. Wow. Is it they're flourishing because of the price of gold? Because they're involved with gold. It seems like if you're involved with gold, you're gonna catch some bids. You're gonna get some investors buying your stock. It's a really small cap, 368 million. Revenues are pretty high compared to its market cap. They do make money, forward P of 38.9, and it's a strong buy, but it's priced really high. Their growth isn't super fantastic because last 2 years been fairly flat, trailing 12 months. They've seen some growth. Maybe people looking at the price of gold and saying, hey, maybe I'll sell that gold jewelry that I've got because the price of gold's really high. So I'm going to use this company and sell the gold that I have or whatever it be. And man, I could probably use their services for electronics. I got a garage. I don't know how many computers I have in there that I don't use anymore, but I don't want to throw them away. I could use a service that will effectively repurpose whatever they can get out of them, and then I can get them out of my hair. I need to wipe them out though, wipe all the data on them. Now, they're growing 23%. That's very good. That's probably why the stock's really flourishing. Is this growth looks fantastic. So that looks good. They have low gross margins. They are profitable. So it looks like they're probably doing consignment or some kind of, you know, agreement that way. That way somebody, sends in, I don't know, $20,000 Rolex. They will sell it to a party that's interested, and the rightful owner will get the money less a transaction fee that goes over to this company, which makes sense. A little bit like the eBay model. Okay, so let's take a look at the forecast. Are they going to continue to grow? We've got a few analysts, but we've got some information to work with. Looks like this year they're growing by 19%. It's expected to be a flat year in 2026, followed by 17%. So this flat year is a concern. They just had a big stock, rally, and maybe it fades because this means that there's probably going to be a negative quarter or two in there, and that might cause a big sell-off. Their profits are not going to expand, so that's also a concern. So I'm seeing some risk. This stock may be under pressure in the next 12 months because this forecast doesn't look good. In a couple years, it may start growing again. But if they have a couple negative quarters, I have to think that investors are they're going to run out of this stock. They're going to have their running shoes and they're going to run out. Uh-oh, it's under pressure. Sell, sell, sell. Over the last month, wow, look at that rise from 11 to 14. Interesting. Let me kick it over to Daryl to see what he thinks about Envela Corporation.
Well, doing the same thing we did on the last one, I'm looking at 15 years, and this looks like a pretty good support resistance line, mainly support, but now it would be mainly resistance because it hits that value and comes back down. But now it is acting as support. So that would be a key value to keep your mind on if you're holding this one. Wow, they've been on quite a run here lately. They are trading above an upward sloping 5-day, 21-day, 50-day, 200-day. They are trading 100% above their 200-day. That tells me there's a lot of risk buying it at this particular level because it has been as recently as August when they were trading below that. So if you want to chase this, make sure you have some pretty tight stop loss values in mind where you're going to step out. Because it looks like it could easily come back down to that 200-day. So that's about what I have to say on this one. Is it one that you own, Benton? Are you an owner now? Or are you just looking at it maybe to buy? Well, let's go take a look, see what's going on. So we have the Dow that's still up 0.25% at the moment. S&P 500 is 0.5%. We have the NASDAQ up 0.6%. The VIX keeps dropping. We're at a great VIX right now. That's showing literally no fear in the market at the moment. As far as the sectors, consumer discretionary is up at the top, but along with technology, energy has moved down. I think they were in second place just a bit ago behind consumer discretionary. Consumer services is communication services is still holding in there. Financials dropped a couple of places. We have some of the defensive sectors down at the bottom, so staples, real estate, and utilities, and part of healthcare. Healthcare has an aggressive component and a defensive component, so you got to kind of split hairs there. But these three are definitely defensive and they're trailing, so it looks like a risk on kind of day to me.
Thanks, Daryl.
I ran out of things to say on the other one and noticed you were gone, so I filled in with something.
I appreciate it. I had to go get another cup of coffee. I appreciate that, sir.
Yeah, my wife just filled mine up too, so that was great.
Nice. So it looks like we've got a few comments. So yeah, probably. Yeah, once you install a hardware device and there's a lot of things can happen. That's why their margins are lower. Magical Self. Cool. Thanks for sharing. It looks like you bought. Which stock did you buy? I'm not following the thread.
I asked Benton a question verbally while you had stepped
Ah,
away, so because that was the stock we were reviewing, ELA for him. So I asked him if he owned it already, and he said he's not an owner, was looking to buy
got it.
because he wants to get more consumer discretionary stocks in his port.
Perfect.
Oh,
So Bo, I don't know if I'm going to stream later today. It's probably unlikely that I'm going to stream later today, but for sure I'm going to stream tomorrow in the afternoon, evening. So I'll try to get my schedule out on the channel quickly this week and let you know. So good chat stuff. DJ, good morning. Yeah, so let's look at NVO for a few minutes. So right now is a good time to harvest some losses, right? And you may be making a very good point, which is, hey, there's plenty of losses to harvest from NVO. Speaking from experience, I sold my NVO stock and we'll be able to apply those losses towards any gains. So we are during that time, and that might be what ails the stock, but Eli Lilly is pretty much the darling of the ball. Investors really like Lilly versus NVO, and they're both in the weight loss game. And Lilly's the one that's kind of getting all the investors. This is still a big cap, pretty decent dividend, really low PE. But when will investors appreciate this stock again? I mean, look at that. This looks like a really nice looking mountain, but a very, very scary chart. Oh my God. It'd be interesting to have you interpret this chart on your side because I don't see that all that often. It's never this clean of a rise and then fall. This might happen is, they rise, then all of a sudden something terrible is announced, like just making this up, but like their product is found to be super defective and they have to make a bunch of returns and stuff, and the stock really comes down. That hasn't been the case. NVO continues to grow the revenue. They're profitable, cranks out cash. It's just the market doesn't like it. It's like, geez, when's it gonna cut it a break? What are you seeing with NVO on your side, Daryl?
Yeah, it's an ugly chart. So we drew some trend lines previously where we connected this value on the December 11th of last year, connected it to this point. It has never been this high since. We connected another trend line to here, and it has tried to break above it, but just look how it's traveled right along that line. Got way below it, come up, tested it, and it's broken out above it right now, but look where it's going. Looks like it's going right back towards that line again. It found, I'm going to go to just 1 year or maybe 6 months so we can see this a little better. They did try to make some progress on the 50-day. It had been declining for quite a while, but that didn't last very long. They've come up and tested it a few times and just keep trailing downwards. 21 days down sloping. I don't know, man. This one does not look good to me. It would not surprise me to come back and test this trend line again, which by the time it makes it out here, you're probably looking at $43 to $44. Probably within the next 3 weeks, if I were guessing.
Yeah, it's one of those that, man, I just don't know what's going to happen to it. And if it starts to work, maybe if it rallies for a month, maybe I'll pay attention. So, so Ricardo, I see Arista Networks. I put it on the list, and I'm pretty sure I sent you all the details on email. Please double check, and then I'm going to check after the stream, make sure I got you all set up. So thanks for signing up. And all right, so Bo. Could Server be as big as Uber? Is that a new ride hailing? So which one are we talking about here? So could SERVR be as big as Uber? Do you know what stock we're talking about here?
I'm doing some searching. I don't see anything even remotely associated with that name.
So let me know, Bo. I want to answer that question. And I know Uber competes with Lyft, and they're part owners in it's that company in Asia. I'm forgetting their name. Those are the ones that I'm thinking. Yeah, let me know. I'd be happy to answer that question. In the meantime, let's see here. So, Magical Self, what's going on with C Limited? So, they did great. Their stock went up big time, and then it's just been going down for like 2 months. I can't put my finger on it. So we're going to analyze it after Arista Networks. So let's get into Arista Networks. And Arista Networks, I think originally they did networking, and they also do security. So let me just make sure. So networking, yeah, security, so forth. It's a very well-known company, good company. Here are some of their routers, okay, and good stuff. All right. So they're part software, part hardware, $167 billion market cap. Year to date, 20%. At times, this has been under pressure. And at times, this has really flourished. More recently, it's kind of been under pressure at times. Okay. Okay. So 5 year, wow, beautiful. 639. And they have been a good growth company, especially compared to Cisco. Revenue 8.45 billion. So you are paying up for this stock. You're paying 20 times revenue, which is an expensive ratio if you look at price to sales. Forward P is 41. Expensive. I know they're growing, but it's still expensive. 41. I showed you that Meta is at 22 earlier in the stream. So there's some stocks you can pick up that have PE ratios that are better. Even Microsoft's at 30, 29 something. Analysts think it's discounted by 23%. So these guys are a $7 billion revenue company. Moved up trailing 12 months, it's 8.4 billion in revenue, growing at 27%. That is a good growth number, 27%. Here's their gross margin number. It's not as good as a pure play software company because they have that hardware business. That's still very good margin on combined business. Very good profitability. The rule of 40, this is close to 40, and they're growing at 27%. So investors really like growth combined with profit. It shows it's a very attractive business. And these guys crank out free cash flow. So these numbers look fantastic. Okay. So that looks really good. No big surprise that stock's just been flourishing. And a good number of analysts are covering the stock. Their forecast looks very good. So we are in this year putting the finishing touches on 2025. 2026, they're going to grow by 21.5%. Their profits are going to expand by 16.5%, and their PE ratio is going to move down to 38. Okay. And going forward, they're going to keep growing at 20%, 21, then 15. These are good growth numbers. Their PE is going to stay elevated for a while, for 2 years, and then finally come into mid-20s. Okay. And I'll kick it over to you, Daryl, and then I'm going to just freshen up my valuation on them. I'm pretty sure their balance sheet's in good shape. Yeah, they only have cash. They don't have any debt. Beautiful. $10 billion of cash. All right. Let me kick it over to you, and then we'll come back to the valuation I have for Arista Networks.
So they recently tested a support line that had really been somewhat established back in January and February before the sell-off in March and then the tariff announcements. They made their way back up to right around that would have been resistance at this point. And then they broke out above that and made some 4 subsequent higher highs. And then we had the November sell-off. But they came down and tested that support level. So, in retrospect, that would have been a good time to buy it. But it's not far above that level. Even now, it's only 10% above it. The 21-day has stopped declining and is now moving back upward along with the 5-day. I do see a black candle today. That means they opened higher, closed lower, but they're closing in the middle of that candle structure there. You have a lower wick and an upper wick, so there's a little bit of indecision today, but I don't think it necessarily indicates a reversal where, I don't know, we have a previous candle here where it was a reversal. I'm going to point this one out because I talk about these a lot, but I can't think of any other chart we've looked at recently where we actually saw it happen. So here are four subsequent drives higher in the price. I want to point your attention to the RSI. So we got overbought on this first one. We came down, we went to another high, but notice the RSI level did not get to the same level as it did prior. We pulled down a little bit, we drove to another higher price, and yet we even had a lower RSI. So the momentum on each subsequent push was lower, even though you were getting higher highs. And I mention every time I mention one of these, it's called a bearish negative divergence. You don't know when it's going to happen, but typically it is going to happen that you're going to get a pullback. So this one was kind of telling you all along that on this last push, we were losing steam, and it did, and it went into oversold condition. So that's why I point these out. It's not that I sell immediately, but when I see these occurring, my stop loss may go from here up to here because I'm just waiting for that to pull back, because usually it will. So anyway, that's a good learning exercise, and one that actually shows what can happen in that particular case. Now, when the PPO actually crosses the center line, and we haven't gone back above that yet, but it looks like it's making progress back to the bullish side, then all of that kind of resets. You don't look at those necessarily anymore. So it's kind of like a brand new ball game as far as PPO. And RSI broke down below even 30, and now it's back above 40. So you're kind of starting a new game here. Accumulation still looks really good. To me, this looks like a good buy price. If you're interested in this one, this looks like a pretty good entry point to me. The money flow is in bullish territory at the moment. And it's done fairly well I'm looking at 2 years here. So over the last 2 years, it's done pretty well. Let me just come down to a year because that's normally what we talk about. So yeah, just barely above the S&P 500. It is underperforming XLK. I think that's probably going to change here in the not too distant future. Telecom equipment, that's the industry group. It's underperforming that a little bit, but that industry group is outperforming the S&P 500. Looks like a good entry point to me. If you believe in the company, then it looks like a pretty good spot to get in.
Yeah, over the last 5 years, this stock has been an awesome wealth expander, a compiler. And I updated my full valuation on this guy. It didn't change. I had all the right numbers because I used the numbers that they had on their last earnings. So they haven't announced any earnings since. And they're discounted by 10%. Their cash flows are very good, no doubt about it. I'm not using the PE ratio that the market is kind of giving it. We just looked at Microsoft. It's good to look at a good sampling of stocks to see what you could buy out there, right? Like, hey, I can buy Meta at 22 PE. I could buy Microsoft at this PE. I could buy so-and-so at this PE. And that way that gives you kind of a frame of reference to say, okay, I'll be willing to pay a 29 PE for Arista. It's above the market average forward PE, and the S&P forward was going to be at 23. Willing to do that, but I'm not going to get way out there because it's just not a good idea. They're not going to have phenomenal growth going forward. They're going to have good growth. But once I look at the combined, it's a 10% discount. Not in love with that discount. I think I can do better. I can do better in security, cybersecurity, software companies. I could do better in pure play networking. I think Cisco might be discounted about the same amount or maybe a little better. And Cisco has been outperforming, by the way. Yeah, Cisco is discounted a little better. Cisco has been outperforming. Cisco's one of those historically, awesome companies. And they've been doing well, up 31%. The 5-year, not as good as Arista. Arista's growth has just been phenomenal. But Cisco, it's much bigger company, much, much bigger. And they continue to grow, and they're expected to continue to grow. So Arista is getting a little bigger. I think it's going to be harder to have those really super impressive growth rates. The market's beginning to kind of say, feel that way. If you look at the last, year and a half, hasn't been all that pretty for Arista. And I was making videos around this time, stating that, hey, I think Arista might be too expensive. And then we had this slam down before the whole, tariff created kind of sell off. So some of those, I think some of my research, was validated by the big sell off, and now it's been picking up, but now it's kind of showing that it's selling off. So Arista, I think, is going to be a good company, but it's not going to be super fantastic. It's just going to be okay. Let's revisit the growth forecast again. As you get bigger, right, the percentage growth, it gets harder to have those super impressive growth rates. And I like the comment that DJ put out there. Arista Network has the best switches. Done. But over time, you're going to see NVIDIA, Cisco, and other networking companies go after them and try to introduce better networking solutions. So we'll see how long they can fend off the competition. All right, good conversation around Arista Networks. It's discounted. If you really like the business and you have a good entry point, go for it. All right, so Bo wanted us to take a look at Serve. And Serve Robotics, up 6.73% today. It has not had a very good year, and even year to date. Now, Serve Robotics designs, develops, and operates low-emission robots that serve people in public spaces for food delivery activity in the United States. It builds self-driving delivery robots. Serve Robotics was founded in 2017 in Redwood City, California. It's an industrial, huh? Cool. Let's take a look at their website. Look at that. So when my older son was in college, his university got these, and they would deliver food for students. That's a pretty cool little device. It'd be cool to open your door and see this friendly looking little robot with some tasty food inside. I could see myself enjoying that type of experience. Let's see if these guys are a good business. I might be willing to order food with this little robot delivering it, but let's see if these guys are a good investment. So they're really low revenue, $2 million of revenue. So you're paying 400 times sales for the company. There's expensive, and then there's beyond expensive. So they're not profitable. Analysts think the world of these guys. Now, I could tell you the impression that those little robots have. It's a pretty neat impression. I could see them being used in office spaces totally, right? Because they're probably friendly to, you know, roaming around your office. And so delivering, stuff, documents, whatever is needed, along with food and stuff. Okay, so these guys, let's take a look at their overall growth rate. So they're not growing very well. So what's going on with growth? Why isn't the product selling? It's a super tiny company. It's $2 million in revenue. So this is showing that the market's not buying this particular robot. And that's why the stock has floundered for 5 years. They got to start selling better. They got to figure out, maybe they got to change the go to market. Maybe they're trying to sell them and they should start just, hey, we'll give you the devices, but we're going to charge a delivery fee. They got to get creative because this is just not growing. Okay. And they've been around that number, $2 million for a while. So that's not looking good. So they don't have any gross profit, which means they're spending a lot more on the device than they're selling it for. These numbers look like, wow. How fast can you go bankrupt kind of numbers? Those numbers look really scary. See how much cash they have. They got a lot of cash. They have over $200 million of cash, and they're burning $82 million each year. So they have really about 3 years of working capital. I think that's enough time. I think they have a good idea, but why can't they sell it? It's like I'm scratching my head going, I would think that more businesses would like to use this little gizmo because if anything, if you see this thing, on the sidewalk and let's say it's Domino's Pizza, it's like free advertising. And of course it's going to get attention. Everybody's going to look over there and go, "Oh, look at the little robot. It's delivering a pizza." That's like free advertising. Or Chipotle, or it's the Uber Eats or DoorDash or whatever it be. You think this thing's getting tested so that it could, especially in densely populated areas, these little robots are out there delivering food. But that's my imagination working, and the fundamentals are giving me a whole different picture. It's telling me stop. These guys have to start proving their business model before I could put any of my capital into this company. The fundamentals look really, really bad. What do you think about Serve, Daryl?
And a big sell off in February and March. In April, they didn't really drop much more. Most of the downdraft was in February and March, keeping in mind that we hit a high on the S&P on February the 19th. So it had started 4 days before that, or 3 days before that. It started selling off ahead of time. They recovered and plateaued basically since May. Not much volatility here. And then all of a sudden we're getting big volatility swings. Looks like they may be slowing down again. But I don't really know what to say. They got a downward sloping 50, a 21-day that's downward sloping. They're testing that today. 200-day has turned around and is moving back up. They did have one day where they closed before that, but to me, it seems a little directionless at the moment. It looks like it just wants to trade sideways. It has been for months.
Yeah, the amount of revenue it has, I mean, it's really concerning they haven't been able to go from a million to 25 million quickly. It's just floundered between a million and 2 million. That's not a lot of revenue. All right, so ready to move forward?
Sure.
All right, so somebody asked about Sea Limited. Sea Limited is a company headquartered in Singapore, and it's a consumer internet company. It does a lot of gaming, very popular company with younger people. It had been flourishing. It was just cranking. It was up like 300%, and it has started this real steep decline. I I invest in Asia. I invest in China. This stock, um, I'm going to show you the fundamentals. I think the fundamentals look good, and it started this rise, and I'm like, man, they're going to keep rising because their fundamentals look fantastic. But the market surprised me, and it's been on this sell off. I'm waiting this for to be done, and I could see myself owning Sea Limited at some point. I really like these guys are put in the consumer discretionary internet retail category, and I think they're misplaced. I actually would say that they're more like Meta or Google than they are Amazon. Amazon sells a lot of stuff online. Got it. These guys are more like social and combined with gaming and stuff. So but that's just my opinion on that. Doesn't really change the valuation. It's a pretty good sized market cap. $72 billion, revenue 21 billion. When you see the growth, you're gonna be like, wow, that's not a bad, price to sales ratio. Forward P at 28.7 again. We're gonna look at the growth in a little bit. That's not a bad PE ratio either. Analysts are kind of agreeing with that sentiment that I have. So let's take a look at that growth. What's been happening? 28% growth in 2024, trailing 12 months, 35%. And we're not dealing with small numbers here, folks. 21 billion. That's a pretty chunky company, right? Growing at 35%. That's what's impressive to me is good sized company in a category that is expanding organically, right? Are video games going away? No. Are all these like experiences online going to get just more pervasive? Yes. All these things organically, this marketplace is growing for Sea Limited. And they're in a region of Asia as well as Latin America and other places where they just have a lot of addressable market to go after. So I like that big picture as well. Looking at the forecast, the growth is going to continue. Let me remind you, they're a big company, okay? And this big number, it's expected it's going to grow by 24% in 2026. And then 2027, 17, 13, 13, 11. They're going to be close to a $48 billion company in 2030, which is 4 years away. And we just looked at Arista Networks. So that's why it's good to see nice variety of stocks. Like, what am I getting for that PE ratio? And Arista Networks with a forward PE had forward P of 44. So this one's got a forward P of 28.5, and it's growing better than Arista Networks. Its profitability, I forgot to look at that. That's important. So we can kind of get our bearings around, is it a really attractive business or not? So the growth is good, but let's see the profitability. So gross margins, 42.8, not very high. Profit margin, 2.64, not very high either. The free cash flow generation is good, 17.5. So these numbers are a little bit of a limitation. Looks like these numbers might be what investors might be concerned with is like, whoa, why aren't they making more money? All right, balance sheet. $9.9 billion of cash, debt 4.2. So they have enough cash to pay off debt immediately if they'd like to. So I would be very appreciative if you could look at the charts on Sea Limited, because I am surprised that the market's selling this one off. I like what I'm seeing, but what are the charts showing you?
Okay, we're going to start off with the 2-year view because they were trading in a trend channel for a full 2 years where they would go up and test the top of the channel, come down and test the bottom. And then finally in October, they broke below it and they've been on a steady decline ever since. So we'll zoom in just a little bit. We do have a death cross that occurred. We're getting a 200-day that's starting
Death
to
cross. I just got over the quadruple witching day spook that you gave me last week. Now we're talking about death crosses.
And yeah, so that's where the 50-day crosses below the 200-day.
Perfect.
Or is the 21 days way down here. So once it started this last downturn, it has not been above the 21-day. It tested it there, and that's been one test in 3 months. So the 200 days getting ready to roll over to the downside. When that happens, you are in a confirmed downtrend. I see that the RSI, once it broke down below the 50 line, it hasn't been back even to the 40 line, maybe once, twice, and it gets rejected every single time that it's there. PPO is negative and looks to be getting worse. It's in distribution mode at the moment, and it looks to be at about a 10-month low. It's been in negative money flow since the 15th of August. So these, as long as these moving averages are moving down, it would not interest me to even think about getting into this one. We've got to see these moving averages start to turn over. And it's got to be more than just the 5-day moving average, for instance. Although I can see that it did go positive right here. So that would have been a head fake and then another 17% drop. So I would not use the 5-day. Although it is turning back up today, it is way too soon with all the other moving averages still moving down. It would not surprise me to see this one back at the tariff announcement lows, to tell you the truth. It may take a couple months to three months to get there, but it would not surprise me to see it there.
And about 16 months ago, the China stocks really were working. They were getting a lot of investment. This one began to get like a lot of attention, which is I thought was overdue for maybe 2 years. China stocks, Asia stocks were not getting much investment. Now, other stocks like Alibaba, they've continued to work because they have other stories that help them. But I've seen other Chinese stocks fade, similar to this one. So we may be seeing that the market is kind of shying away from stocks in Asia for the time being. Again, I'm going to wait for it to start working. Let's take a look at the valuation I have for Sea Limited. I think it's discounted by 37%. I think it's a really good business. I like the businesses that can continue to grow with very little capital necessary. And I think Sea Limited is that type of business. I also like businesses that have a pretty good grasp on future revenues. And these guys have a business that is going to be in demand in the future. So it's kind of future proofed is a word or probably not an official word, but in the English language, but I would say it's future proof. It's a part of an industry that is doing quite well. I also like the exposure in Asia. Asia is a very big economy with lots of people that like to buy services, that like to use products like Sea Limited. So there's a lot of things there that I like. I'm going to wait for this thing to do its have it sell off. Once it begins to work, I'll probably be in the Sea Limited stock. But for now, I'm not an investor. I did see that drop. I should have consulted Daryl, and I bought shares, and I saw those shares go down about 20%. And I finally got rid of the stock just to limit the damage. I didn't buy a lot, but um, as mentioned very early in the stream, I want to pick 3 out of 4 winners. This one here, I like the business. I like a lot of things about it, but it just surprised me. It sounds like it wouldn't have surprised Daryl, so I'm gonna start floating more stocks in front of Daryl just to get his opinion, see when I should be getting into these stocks. But sometimes, respectfully, I do things that are the charts wouldn't tell me to buy. Like I started buying UPS at the right time. I think Target so far was the right time. And I'm going to keep doing that because I got to follow my own intuition and research. I got to make my own mistakes so I could then get better and better and better, and then I could make my own correct moves as well. And Sea Limited is a stock that I have. I have it as a stock that I want to be an investor at some point, and we'll see when that point is in the future. But for now, I'm not buying any shares. For now, it's a watch stock. It's a good watch stock. So, hey, watch this company. I think it's going to be worth a lot more. So we're going to cover TD. Forgot who covered that. Ricardo, I'll be sure to research my emails. Maybe I didn't do something right, and I'll be sure to get you all your member stuff right after this stream. So let's see here. Let's take a peek at the market, see what it's doing here. See it, what stocks are catching a bid. Oh, Meta lost its little rally. The software space is looking nice and green. That's good. Nvidia is still working. Financials are still working. Man, look at all that green. Very little red out there. And Citi, that's my holding. Man, I like Citi. I bought it at the right time, and it's been a good winner. And I switched horses. I owned JP Morgan for a long time. That was a good stock, and it just got expensive. So I switched horses, and this horse has really been winning races for me. Glad I did that. But other places in financials, looks like asset management's flourishing. Capital markets having a good day. Industrials, look at that. Aerospace and defense, GEV, looks good. Energies, nice and green. Materials, nice and green. I did a best and worst material stock, and it's it's a very small sector compared to like technology. Look how big technology is. Massive. This whole area is technology, and the size of the real estate it's taking up represents the market cap, overall market cap of the sector. So it's gigantic. It's bigger than both financials and communications combined. And you see this little sector here, materials. But it's not about, oh, wow, well, it's probably not as good as technology, but The video I created, I highlighted 4 different stocks that are up more than 100% in 1 year. It's like there's some awesome performance that's happening in materials. And there's probably more left. There's probably some good performers for 2026. So let's go find the right stocks, whether they're in little sectors, hidden pockets of value, or they're in these big obvious sectors. I just want to make money. I want to appreciate or increase the value of my shares, whether they're in a big sector or a small sector in 2026. All right, so let's jump into, somebody said that TD is steadily rising. Yeah, this one came up. This one's a fantastic performer, 79%. The banks, I guess, are going to clean up with low interest rates. Is that your expectation, Daryl?
Yep. That's exactly what I'm expecting.
Man, because if you have more activity, and activity is, hey, I want a new home loan. Hey, I want a home equity line of credit. Hey, I would like to buy a new car. Hey, I would like to do something that requires financing. Banks will charge transaction fees. Transaction fees are profit for them. And all those things are good. And they're going to pay lower interest rates because interest rates are falling. So they can make loans, and the loans they have on the books are going to be more profitable. The net interest margin is going to be better. They're paying a nice dividend. And over the 5-year, look at that. So we had a sell-off. When we had interest rate rising, the increases in interest rates they were a burden. They were a big load on banks. Well, we're over that. And these guys are up in Canada, right?
Yes, I think so.
So they're up in Canada, and I'm in the US, but I think I've heard through investors that I know in Canada that if you want to trade stocks up in Canada, you have to pay. You have to pay like per transaction. It's kind of like the old way we used to buy here in the US until Robinhood changed the game. So that, I think, provides more income for institutions up there. But from, just over the last month, this thing's just been on a tear. When did it start that big rise? Looks like coming out of the big tariff battle, or the big tariff scare, this stock is up really, really well. So when we look at banks, got to focus on the expansion of book value. The book value represents what are the assets the bank holds compared to its stock price. And I'm looking at the wrong financial. I want to look at the balance sheet for that. And when we look at the balance sheet and look at the book value, I believe I'm going to get a book value per share. So I'm getting a book value per share of 73. And more importantly, what we want to see is a bank grow book value. And these guys have grown it from $40 per share up to 73. Nicely done. Excellent work. This is what JP Morgan did for 20 years. And they became the most valuable bank in the United States. So this is looking fantastic. Good job. $73 per share. When we go and look at what the price to book ratio is, 173, and that is above the average. I mean, the stock price has been increasing. You can get Citigroup for a lower price to book ratio. You can get a couple of other banks for a lower price to book ratio. We want this as low as possible. If you're at 1, that means all the assets on the balance sheet are the same value as a stock. So it's almost like you're getting all these assets and you get the business for free. And so in this case here, it's not quite, the assets don't equate to the stock price, but you're getting a business. You're getting a viable business. So it's really impressive what they've done and how they have rewarded stockholders. Looking at their forecast, see if we have a forecast. Now, I don't know if this is true, but this may be a little bit of trouble ahead, right? If you have a contraction in revenue, there's probably going to be some negative headlines out there. So I would do some homework there. I'm not a TD investor, but I would take a look at that. This would be trouble ahead if we have a contraction. So we're already through this particular year. I'm going to switch this to quarterly. We had a negative quarter here. Huh. And I'm going to open up Citi real quick just to see what its forecast looks like. And this is the stock that I own. What's the price to book on this thing? Price to book 1.06. And when I bought it, it was like 0.8. And they've been kind of rebuilding their reputation because they got caught like 10 years ago doing some things that the government thought were not cool. Now, these guys next year are going to grow by 3%, then 3%. And then eventually 3 years from now, they're going to be contracting a bit. But they're going to be growing. I don't think we're going to have negative headlines, and their profits are really going to grow. Look at that. This year, they grew profits by 30%. Next year, they're going to grow them by 31. And then after that, they're going to grow them by 18. So I don't see any negative headlines coming anytime soon. So remember that when we buy stocks, we buy in a market of stocks. We get to pick out the best one. You're in the produce section of your grocery store, and you're looking at these apples. And it's like, man, which ones are the nicest looking apples? I look at the freshest. Let's pick those that have the best price, right? One apple, and I don't know what apples cost, but let's say one particular apple looks good, but it's $20 a pound. And then these other apples look just as good or maybe even a little bit better, and they're $1 a pound. Well, I'm going to go buy the $1 a pound apples because they're probably going to taste similarly. So let's go find the best stocks that look like they're operating the same businesses but have better ratios, better value for the investor. So that's my comments on TD. And what are you seeing on the charts for TD?
Well, it's lower left to upper right. All the moving averages are rising. It is in overbought territory, according to the RSI here. PPO still looks good. Accumulation is at 52-week highs. So the chart looks really good.
Yeah, it's a good looking chart. Hey, while you have this screen, Mike, the dividend investor guy, wanted to see if you could look at the charts on Nike.
Okay. Okay, there it is. Keep getting worse. So let's go back here. I've shown this one quite a few times. I created this chart probably 3 or 4 years ago, and they have fallen out of their trend channel and never looked back. They're trading at levels they were trading at in 2015. So that's the big picture view. They do have a new CEO. Well, he's not new to the company, and that's probably one of the problems. So they've been on a downtrend. I'm going back 3 years. Okay, 5 years. I have to go back 5 years to find the start of this downtrend. And you can see where it's going, and it's not getting any better. So they've got to make some changes. I don't know. This company is struggling. They have lost their mojo.
Man.
And that's here regardless of what people say. This is what people are doing with their money.
And you know, it's just one of those businesses where you look at their margins and so forth, it's not a super desirable business. And I remember when I was in college, we had a section, I forgot what class it was, but it talked about how the best companies have strong barriers of entry. They tend to be software companies that have patents for their software and so forth, or pharmaceutical companies, strong patents, where there's a big barrier to get into that business. Shoes, not so much. I mean, I get Nike's got a strong brand, but you got Adidas, Puma, you got uh, Hookah has made a lot of noise out there, and then so you have a lot of brands that are coming out, and what's the other one? Um, my son's buying them. New Balance, like New Balance is making noise out there, so there's not a big barrier to come in and set up a shoe company. Maybe come in as a new like Hookah did. Hey, they came in and the category of shoes they're selling are super comfortable shoes that people can wear and go outside and go for hikes, walks, runs, and it's easier on the joints. So very good idea. So they grabbed the market from them, and you see other companies doing the same thing to Nike. So Nike has a growth problem, but it's not going to be easy to fix because you're in a low barrier of entry industry. There's going to be other hookah like companies that are going to come out, and then you're going to have to deal with them in 2026, and then another one in 27 and 28 and so forth. So thanks for covering the charts there. It looks like Ricardo, I checked my email and I was a bonehead. I wrote the email. I forgot to hit send because I gave you access to all the systems, by the way. You should have gotten those emails, and you should have gotten an email a second ago from me giving you an invite to Discord and so forth. Sorry about that. And thanks for circling back to me. All right. So thanks, Mike. Great to have you. I hope you have a terrific week. All right. So I don't know where I left off here. So we had TD. We're going to do Mercado Libre versus C Limited. And who asked for that? DJ. He's asking that we get Mercado Libre and C Limited into the octagon, the mixed martial arts octagon, and see which one is the better stock of those two. Let me check in on other chat comments before I get into that piece. So it looks like I've got TD covered. Somebody doesn't like their customer service. My bank is super cool. I like the people, but it's an experience. It's so 1980s. I just like doing stuff online. I actually dislike using cash, but I go to the ATM, I don't know, once, twice a month, get cash so I can, do stuff when I need to. Like I took my wife out for breakfast yesterday and I paid with cash because we went to this little niche place. But the whole experience of banks is not the funnest thing I get to do in life. So, all right, good luck. I hope Nike starts to work, but just be aware. All right. Magical Self. So Uber had been selling off, but I think Uber was going up today, right? Yeah, it's up today, but yeah, you're right. Over the last month, no bueno. Year to date, not so bad. But if you bought near the peak, you bought at $100 and we're down to 81. So yeah, that could be a setback. Yeah, I agree with you. It's either the ugliest chart we've ever seen or a big opportunity. The art of investing. Yeah, you're welcome, Mike. I hope we're building a combined knowledge skill set to just make every investor that participates better and have better performance in 2026. Yeah, I do agree on using cash when you gas up, by the way. It saves you, I don't know, 3 or 5 cents per gallon. So I do know that part. All right, so let's start the cage match between Mercado Libre and C Limited. I just covered C Limited, so um, I covered that it's a discounted stock. I like its growth. It's a terrific, you know, company that's located in Asia. I like that about it. It's really been places as a stock price, right? So, but it's not about, can it come back to, I think it could go back to that valuation because it got there for a reason. Mercado Libre recently has also been under some pressure. Looks like it's come down from 2140 or so down to 1900. And it did pick up a bid late last week, but it has been under pressure. This is a good growing company that does e-commerce down in Brazil, Argentina, Colombia, Mexico, those countries. And they have been growing really well. Forward PE is high because it has good growth, real good growth. And I really think they're going to continue to grow because Amazon, of course, would be the big competitor we think about in e-commerce. But these guys, culturally, regionally, they just know what catalog of products to sell on their platform. They know how to communicate better with the customer that is in Brazil, Colombia, Mexico. They know how to sell to that customer better. And that specialization is going to enable them to succeed. They drive good cash flow, and I like how they've grown their cash flow from 4.6 billion up to 8.6 billion. That's a very good sign that business keeps getting bigger and making more money and more cash flow. Very good. They're an e-commerce business, so they're enabling vendors to sell on their platform, and their gross margins have been coming down. It'd be nice to see them stabilize and not go down any further. Free cash flow is fantastic. Profit margins are okay. It's e-commerce. Even the great Amazon has profit margins around this level because it's e-commerce. You're not going to have a big margin left because you're trying to sell online and be price competitive. So that looks fantastic. When we look at their forecast, they're going to continue to grow, and they're a pretty big outfit. It's not small. And eventually get to like nearly $70 billion in revenue in the year 2030 and continue to grow. This is really consistent. Their PE ratio is falling. Next year, it's going to be 31, going to 22, 16. It's not going to go into the teens. If they keep growing by these rates, this stock's going to work. And I think that C Limited stock's going to work. Now, jump into Mercado Libre. It's a stock that I do own. I have pondered, man, it's been selling off. Should I trim back some shares? I have to admit, I did trim back some shares. But I kind of recommitted that, no, I'm going to keep this stock because it's really nicely discounted. I'm seeing growth. I like being in an industry that has a really strong future. E-commerce definitely has a big, strong future. I think in Latin America, there's true organic market where people either are buying online for the first time or are moving from buying a couple things a year online to buying regularly online each week. So the cage match, the battle between Mercado Libre and C Limited, I would have to go with Mercado Libre. Better discount, growth is there, the business is solid. I like them both, but I would pick Mercado Libre over C Limited.
And that name just rolls off your tongue, man.
So the name too. The name.
I always say Melly because it sounds like a redneck trying to say that name. So I ever rely on Melly.
There we go.
But it just rolls off your tongue. It always sounds great.
if you buy at the right time, I'm a buyer of both. And this one here, it gave us a good opportunity back here. But look at that. I mean, generally, this looks really good. It has this recent pullback. This is a pullback I'm referring to. But man, if I buy during these times when it sells off, I am sitting pretty. I am just loving the stock. So that's my compare. Mercado Libre versus C Limited. I like them both, but it's Mercado Libre that takes the bout between those two stocks. All right, we've been streaming for a little over 2 hours, and I think it's time to land the plane. This is a good one. The name Melly reminds me of Mel's Diner on Alice. Kiss my grits. Remember that statement?
Yep, exactly.
Yeah, and that's a show. It's funny because I was a kid when that show was on, and it still grabbed my attention. Probably grabbed a lot of people's attentions. DJ, good to see you, buddy. And thanks for asking. Thanks for attending. All right, let's land the plane. What's going on with your channel this week?
Well, let me pull this up here. Now, there's a QR code that'll get you right to the channel. I thought that'd be easier than just providing the
good
link.
idea.
So yesterday I released what I started about 3 or 4 weeks ago that seems to have gotten a lot of interest. And it's just at the end of the week, I just pick out some of the charts in my own portfolio that where I saw some interesting information. And I'm just sharing with people my thought process. I review the chart. Here's the actions that I took based on what I'm seeing on the chart, whether it was buying or selling some options, whether I did some trimming or picked up a few shares. I cover that in these videos. So for people that are unfamiliar with how you can actually use charts to make decisions, these will help you do that. And also I released, this is probably for some older investors, but this is a review of 3 closed-end funds that I own and how they're performing, what they hold, how you can analyze their holdings. And some of these actually, I think it's probably 2 or 3 weeks ago, Shadow Guy mentioned the best way to invest in new companies is before they IPO. And somebody commented right after, like a question mark, like, how do you do that? Closed-end funds are one way you can do that. So one of the funds that I own here has an investment in Databricks, which is going to go IPO probably next year. And Anthropic, they also own Anthropic, which could IPO here in the next year or 2. So this is one way for private, retail investors to get involved in pre-IPO companies. So anyway, that's the 2 new videos for this week.
Yeah, and which video did you list out all the different charts on? You put timestamps on the companies you covered. I found that one to be very useful.
These weekend ones are the ones where I do that.
So ton of value, everybody. Like if you look at that video and you look at the description, there's like 20 different stock logos, and you can go straight to the stock logo and see his chart analysis. Super value right there. So pay a visit and check it out.
So anyway, that's it for me.
All right. Awesome stuff. Nice work today.
Thank you.
DJ looked at the video, or we'll look at the video. Check it out. And as for me, I plan to create a couple of videos this week I am working on the I'm doing some homework on the AI trade. How long is it going to last? What are and more importantly is what am I looking for that would tell me that the bubble's about to burst or the bubble's going to deflate. I don't know that it's going to burst, but I think the bubble will deflate at some point. And I'm trying to do homework there because I think that is going to happen as we approach two earnings from now specifically. I heard Steve Eisman. I saw he has his own YouTube now. I don't know if you do you watch Steve Eisman?
No.
You know who he is, right? He's one of the big short guys. He he's
Um,
he shorted the subprime mortgage market along with Michael Burry. He's the second most famous investor that did that. He was played by um Steve Carell in The Big
okay.
Short. That was his
All right.
character.
I've
So
heard the
he
name, but that's about it.
I think he like with any investor, by the way, including like Warren Buffett, I listen to what they say. There's some things that I agree with and some things that I don't. Steve Eisman's right there with everybody else. But I do think that he does have good vision of the market. And he said something that did ring true in my head, which was he's like, "Hey, is the AI trade going to keep working?" And he said, "It could. It could work for a couple of years. It could also fail." And he said he was really keen in on the earnings announcements that are going to come in roughly 6 months. And the way I'm positioning it is we have an earnings season that's going to start in a month and it's going to last for about a month. That's not the earnings season that's going to tell me everything that I need to know. It's the one that follows, the one that's going to happen in 4 months, 4 to 5 months. We saw how the market treated Meta after they came out and said, "Hey, look at us. We're spending $75 billion in the data center." And their stock price got hammered. And it's like, oh, okay. Hey, and they came back and said, "Hey, on second thought, we're not going to spend 75 billion. We're going to scale that back by $30 billion. Now the stock price is going up." Well, if you have probably more of the common message that companies are going to start saying is, "Hey, we are going to watch our spend in the data center until we're seeing businesses really take off." That's going to be pressure on NVIDIA, Broadcom, the neo cloud companies. That could be a nice correction moment. It's going to be it's going to be driven by when earnings announcements are made and when canaries in the gold mine start, falling and saying, "Hey, we're not going to spend that much," then we're going to see a pullback. So I thought it'd be interesting to create a video just to kind of lay the groundwork of what I want to follow in 2026. I'm invested in a lot of the companies that could potentially see their stock prices go down. So it's not kind of I started with a conclusion, then I want to create my video. I want to see where the data takes me. And again, I want to set up a framework that I could follow for 2026. And the other video that I'm creating is a video on the best and worst neo clouds. And those are like CoreWeave, Nebius, and others. And the reason for it is, I've created videos on CoreWeave, and that has gotten like the highest, probably top 3 highest views on my channel. And I haven't put that much energy into it. Like it gets, as many views as my Google videos or, not NVIDIA. NVIDIA gets a lot of views, but it's kind of like when I look at the data, I'm like, well, maybe people want to hear more about CoreWeave. They want to hear more about Nebius. And it is a space where I do have it's in my circle of competence. I have worked in that industry. I understand the industry. I understand what they do. I understand the business models. And hopefully I can share my point of view. And it will be an industry that I'll follow because that is a canary in the gold mine. And when we look at the AI trade, is CoreWeave is at the tip of the spear. If if things begin to slow down, those guys are going to be hurting. If things continue to flourish, their stock's going to continue to flourish. You're not picking a low risk stock. You're picking a high risk stock that has high reward and also high penalties should that trade stop. Did you want to show something else, Daryl?
Um, I don't know if anyone has been following my information on Meta, but Meta, I bought 5 uh, call options, and I may buy them on one day and trade them, close them out 2 days later. But this has been about a $2,000 profit on those call options.
Nice.
And what I see today is we had an open that got up above the 200. This thing wants to be above 200, but it cannot do it. It keeps finding resistance right there, but it wants to break out. And after it shot up $11 a share, it is now dropping back down. So we're back into a negative at the moment. So as soon as these two rolling averages right here start turning, I'm buying another call option because tomorrow you could probably make $1,000 on it. I would not be surprised.
Well,
This thing's setting up really nice right now.
Very nicely done, sir. $2,000 in one day. That's
no, $2,000 over 4 trades, probably over 2 weeks.
Okay. All right.
So it was 200 on one, 500 on another, 1,300 on one. So,
all right. Hopefully you keep doing the same thing and getting the same result. So as we close things out, the S&P is up 0.61, NASDAQ's up 0.6. Look at this, like nice spread across the 3 major indexes. Sometimes you see one ahead of the other. Mostly it's the NASDAQ's ahead of these guys. But right now they're kind of even Steven. And when you look at the heat map, look at all that green. It's like everybody gets to participate today. Just a couple red spots. I've been saying Walmart's expensive. I'll continue to say Walmart's expensive. And I've created videos on it. And it's almost $1 trillion valuation. I don't understand why. They're a retailer. It's not a business I want to own. They don't make a ton of money. It's priced too high. That's an opinion I have. Computer hardware is under a little stress, but beautiful green. Man, Santa Claus has come to town. It's got a big bag of toys, giving it out to all the kids, whether the kids are in financials or technology, or they're energy kids over in the Permian Basin in Texas, or they're kids mining gold, or they're making rockets for RTX. Everybody's getting toys today. Santa Claus has come to town. Well, let's hope that it keeps going. And we end the year on a positive note and start trading in 2026. All right, everybody. So that is it for today's stream. Thank you so much, Daryl. Awesome work today. Daryl and I are going to stream on Wednesday. You know, the market will open at the usual time, but it's going to close early. And we will stream on Wednesday, plan on stream on Friday, and hopefully you can join us at that time. If you would like to get me any request ahead of the streams, that'd be fine. You can shoot me an email, message me on Discord, go on a video and put in a comment. However you want to get me a stock symbol, feel free to. and then we'll load up a nice list of stocks to go over on the next stream. With that, everybody, have a terrific day. Good luck this week, and we'll see you on the next stream.